What's going on, guys? In this video, I want to go over how the 20 SMA strategy is so simple, anyone can use it. It operates at a very high win rate percentage as long as you can keep yourself under control. Now, many of you guys already know the strategy, but I want to outline today's setup because it actually came very, very early in the open. And sometimes traders get a little discouraged because trading off the open can be scary. Okay, I get it. I understand it. You can get faked out a lot. The ranges are bigger. The losses will definitely that you incur will definitely be bigger. But there's a way that you can kind of tighten up your stop loss so you have a little bit more confidence to take these 20 SMA setups off the open. So what I'm talking about today is July the 10th. We're going to recap today's setup. I was involved in this setup today. And if you look at off the open, we put in a nice spike. Now, how many people do you think probably got trapped on this spike off the open? Probably a lot, right? Because just the way that the market's been trading, market just pushes up and then it just goes up and up and up and up and up, right? So my best advice for you is to stay patient. Stay patient until your setup truly presents itself. Because for every time you take those scalps where you're just scalping momentum because it looks good, a lot of times you're building very, very bad habits. Okay, and you're building bad habits where you might get lucky, you might pass an evaluation, you might get into a funded account, and then boom, in one trade it's all gone because you're not really following any type of system. You're not really following a trade plan. You're not really managing your risk correctly. So in this particular situation, we put in this little bit of a spike off the open, and then the price action proceeds to start selling off. Now this candle is a very large candle. It's 68 points. Not too many of us want to risk 68 points on one particular trade where you're kind of putting your stop loss here and then you're entering on the confirmation break down below, right? So how can we kind of tighten up that stop loss? Well, one of two ways. There's a couple of indicators that I use on the chart, one of them being the 20 SMA, that's the blue line, the other one being this yellow line, which is VWAP. So once you get this candle to close below the 20 SMA, this is going to be your entry point. As soon as you get a following candle to confirm that low price, you can definitely put your stop loss above this wick. Okay, and that's going to limit your risk to about 17.5 points. So from 68 points to 17, 18 points is a better risk to reward, right? So how would you know to put your stop loss there? Well, as soon as you close below this 20 SMA, you get a bounce. And then once you get a failure to confirm that bounce and you stay below supply, this is acting as a swing high that you can use as a stop loss. What's the next area that you can use as a stop loss? This 20 SMA. If price breaks and holds and closes over the 20 SMA, you get out. And in this particular case, you'd be risking about 25, 30 points. So you're cutting your stop loss in half. Again, at this point in time off the open, the ATR was only sitting at 16 points. Again, market's still figuring itself out. So I like to gauge my scalps off of ATR. If I'm playing heavier size, where I'm playing closer to a mini, sometimes even 2 mini contracts, I'm going to try to take half the ATR. Okay, so if the ATR is 16, I'm going to look for 7, 8, 9 points. If I'm playing micros, which probably 70% of the time I'm playing micros, 4 micros, 5 micros, 3 micros, I'm going to look for something close to that 1 ATR, okay, on a 5-minute time frame, because that's the entry time frame that I'm trading. So in that particular scenario, you're getting in on this particular trade below 23,020, and within 5 minutes, once confirming, shoots all the way down to 22,988. Well over your 16 points. In fact, well over 20, 25 points within a matter of 5 minutes. And you can see we obviously drop down a little lower. And as you start to get more advanced with your technical analysis and your charting, you can have things on there such as a daily 5 SMA. I've also got this previous London high going back to Tuesday that was sitting right here at around 22,971. That was another area for a potential take profit. It's another area for a potential break and then confirmation and continuation down, but we'll get into that in another video. To everyone who's watching this, if you guys want to learn more and maybe you want to get involved with the community who's actively trading these setups, I have one space available left for the month of July to join Evolution Traders. That link is down in the description box below. It's a one-time fee. Also, Apex 80% off sale has been extended. You guys can use code DAnthony if you guys need to practice this strategy. I highly recommend practicing on an evaluation or some type of prop firm rather than risking your own cash. With that being said, I'll catch all of you guys on the next video. Make sure to like, comment, and subscribe. The more likes that this video gets, the more that YouTube will push it out to other traders. I would highly appreciate that. I will see everyone on the next video.